Hello and welcome to our special programming during Financial Literacy Month. I hope you all know that April is Financial Literacy Month. It's a very important month because you may have more money than you realize. You may not be budgeting and spending properly or properly planning so that you are creating and laying the foundation for generational wealth, not only for you, but for your family and grandchildren. Welcome to our program. My name is Shahiwa Jarrett Gellin. I'm the president and founder of the Broward County Black Chamber of Commerce, and we are extremely excited to bring you this programming today. Now, we have an expert with us that will go into what a CFP does and take your questions. So I hope you're ready for an exciting program. Now, help me welcome Stan LeConte. He is a certified financial planner with 16 years of experience in the financial services industry. He holds two advanced designations, including the CRPC, Chartered Retirement Planning Counselor, and is currently pursuing the NFLPA designation. Stan has been in the leadership role as an associate branch manager, where he managed his peers and over $270 million of assets under management in a Fortune 200 firm. Currently, he is the founder and president of IAA Private Wealth Advisors located in Fort Lauderdale, where services are vast as he services a vast client base. Stan has been recognized as one of South Florida's most powerful and influential Black professionals in 2002 and an honoree of Black Men of Excellence. He is also a proud member of Kappa Alpha Psi Incorporated fraternity and the 100 Black Men of South Florida, and actively mentors young men in his community. It is great and it is important that Stan is very passionate about financial literacy and he's very passionate about his profession. So we're going to welcome Stan LeConte without further ado to the program. Hi, Stan.
Hello, Shahiwa. How are you doing today? Thank you for having me. Thank you for having me today.
I'm good. I'm good. I feel funny because I'm like, I'm used to calling you Stan Lee, and I see you have Stan. So I'm trying to respect the Stan.
No worries, no worries. I try to shorten the Stan. I don't think I ever liked Stanley ever, but
Okay, I got you. Okay, I'll respect it. But welcome. We're really excited to have you because I feel like this is a topic we don't talk about enough in our communities, even in our family, like around the dinner table with our parents, with our siblings, really ensuring that we all are creating a stable financial foundation. And then, of course, passing that on to the community. Before we get started, and talk about, what it means to be a CFP and why one might need a financial planner. I want you to tell us a little bit about yourself and how you got into this profession.
okay, perfect. Well, I started off wanting to be an accountant. Just everything was about being an accountant. Accountant. I took the courses. I went to the school. Went to FIU. Started off at an accounting major, and I wound up flipping that into finance after a while. Just simply watching the landscape. Um, However, I did have a minor in accounting, and when I finished college, I wound up getting a job. Guess what? Doing accounting work. So I did accounting work for about 10 years, and it bored me to death. No, listen, no qualms to the CPAs and the accountants out there. It's just not for me. It just
Right.
wasn't right. So went back to school, talked to a few of my professors, and he told me about being like a financial advisor and
Hmm.
advised me to go to Barry University at the time, who was providing this course called Certified Financial Planner designation. So I went to Barry University and had my first investment course there. And throughout uh, throughout the people that were there was the branch manager who was at a Fortune 200 company, and he invited me to come to have an interview at
Yeah.
this place. And I did the interview, and he hired me right on the spot. I went through
Wow.
training, and from that point on, I've been a financial advisor going into my 16th year.
Okay, very nice. I just wanted to kind of, get that background because there's not that many, when you look at the statistics, there's not that many African Americans in the financial our fintech industry. So just really curious as to how you got into that profession. Really cool.
Right.
Um,
Interesting enough to hear what, not to belabor it, but as a CFP, there's only 2% that represent us or brown individuals. So out of the 92,000 certified financial planners nationwide, there's about 1,672, 73 now that look like me.
Wow, thank you. And I think this goes to why we're doing this programming, because it is important that as a Black Chamber, we're showing that we have individuals that look like us in this profession, that can understand, where we may be coming from when we talk about maybe some of the apprehensions that we have as a community with investing, etc. But I want to uh, talk about the importance of the concept of financial planning and its importance of managing one's, financial well-being. So what are the um, 6 areas of like financial planning?
Yeah. So the 6 key areas of financial planning is the core of all of our financial planning processes, right? So it starts off with cash and cash equivalents. So you want to make sure that you have enough emergency funds or opportunity funds in the bank. Okay. And then the next area would be your protection planning. So you want to make sure that as a family or individual or a business that you are accurately protected. And we want to also, as financial advisors, see if you're paying too much on that side. So if we can give you the same adequate protection and have you pay less, that's a benefit to you because guess what? Now you can save more money. All right. So then after we get to the protection side, we look at the tax planning. Tax planning is a huge part of the 6 key areas simply because over 92% of Americans who don't believe so overpaying taxes, even if they are receiving a tax refund. So, by putting some tax strategies together or reconforming your portfolio, there's opportunities to save year over year on your tax planning. So, we already have three major concepts of the 6 key areas of financial planning. Then we go into retirement planning, right? We all work for the end goal, and that is eventually for us to retire. So we look at the opportunity to show you how, where, and where to invest, where to put your money, and what rate of return we're looking for based on your risk tolerance, your time frame, and tax bracket, right? Then we go into obviously estate planning, which is very important. That's been a hot topic in the news. We've seen some of the major stars here die without estate planning, die intestate with no estate plan, which is horrible. You're just giving away around 40% of your estate to the probate attorneys, right? So uh, we want to avoid all of those as well. So estate planning is a very important part of it as well. And then obviously cash position, insurance, and retirement. So those are the 6 key areas of the financial planning process.
Okay, no, well, thank you for going over that. I think it's important for everybody to kind of get the fundamentals. Um, Now, why would you say it's important for someone to have a financial planner?
Well, one of the main reasons to have a financial planner is there are, as we just mentioned, 6 key areas that you have to look into. And most people are busy, right? If I ask any one individual, we'd never have enough time, even though there's 24 hours in a day, we always run out of time. So trying to manage, making sure that you're on track in all those 6 key areas and managing your household, managing your kids, managing your small business, managing your hobbies, managing your friends and family may not always be top of your priority, right? And you may let things slip through. And then when you're doing things, you may do it heuristically, right? You don't know the right way to do it, and you are often doing it the wrong way until you get it right. But that costs you time, right? The time value of money, right? It costs you opportunity costs. And then obviously you're making mistakes along the way that may have cost you opportunities. So working with a financial advisor kind of streamlines the opportunity for you to make sure that you are doing the best that you can for you and your family, and that you are actually making the best decisions when it comes to your finances.
And no, that's important. I think that sometimes people push back and it's like, well, I don't really have a lot of money, however that's defined. But at the end of the day, you want to make sure that you're doing what you're supposed to be doing with the money you do have. And I think that should be the focus. After all, the people with lots of money utilize financial advisors, etc. So why shouldn't you? So that brings me to the next question, like who needs a financial planner? And you kind of answered some of the why, but who needs a financial planner?
Right. So there's a misnomer, and you mentioned a little bit, Shahima, that only the rich individuals need a financial planner because they have so much money and they need to help manage that process. But if I can give you an example of someone who makes 300 or $400,000 a year, and an individual that makes $60,000 a year, I can tell you that in one instance, the $60,000 a year person saved more money than that person making three or $400,000 a year. Correct? It's simply because they were disciplined. They had a financial plan. Every year we would go over the financial plan, and they would follow the steps efficiently. They got a rate of return, and by the end of their 30 years, they had enough money where they could retire, and they never had to look back. Whereas someone making three or $400,000, they spend $300,000 or $400,000, and there's nothing to save. There's nothing to plan. The only thing that we could plan is debt management and how to reduce the spending. Right? That'll be first and foremost on the opportunities there. But when you ask that question, who can use a financial planner? It's someone that has cash flow, someone that has goals, someone that wants to retire efficiently, someone that may have other goals than just retirement. Maybe they want to start a business. Maybe they want to do something else and don't have the steps in order, and the know-how to get there. And this is where a certified financial planner or financial advisor can come in there and give you the basis to put everything in together so you can start those building blocks.
No, and I like that. That's important. So in essence, you're saying pretty much everyone needs a financial planner because at the end of the day, you may have you have income coming in, and it's all about how you spend it, how it's allocated. So you want to have a plan so that you can make sure you're putting it where it should go. And like in your example, if you're spending all of it, you need somebody to help you plan so you're not you're
Right.
not spending all of it, which is important because when we listen to a lot of the statistics, you may hear on CNBC or Bloomberg, a lot of Americans at different points in time, it ebbs and flows, may not be saving as much. And then you look at some of the retirees and the amount that they save, and it's kind of low, which requires them to have to work. So obviously, you want to be able to plan in advance, so you're not working during those golden years. So talk to me. That kind of brings me into the next question. What are the consequences of not having a financial planner? And then we'll kind of get into what a CFP is and what you do.
Well, how much time do we have, right? Well, the consequences of not having a plan, writing down your goals and having a plan and process and system is pretty detrimental. Everything that we do involves a plan. When you go to work, there is a plan set for you, and you follow through with that plan to make sure that your business is successful. And you do that repeatedly on a day to day basis. And for yourself, you should treat yourself as a business, right? And because you're treating yourself as a business, you should have a plan. You should follow those steps repeatedly on a year to year basis until you reach your financial goals. What I can say is the detriment of not having a plan is working until you can no longer work any longer, right? Not having the opportunity to live a full lifestyle that you desire, not reaching the potential, your full potential as a working individual or someone that makes a lot of money, not reaching your full potential and just kind of, letting things go by, making crucial mistakes where you're overpaying in taxes or having to pay more than you should, not having your assets protected in the right way, It's the big thing. We have these conversations now because we hear about these banks failing, FDIC and all this other things. But the truth of the matter is there are many people that we'll run into that have all of their money in their checking and savings account. You wouldn't believe how many people I run into that have money just in their checking and savings account and think that they're safe. You're a walking liability. Okay. They're just waiting for someone to slip and fall, sue you, and take all of that money because there's no protection there. So a financial advisor is there to insulate you against protection. It's able to make you there to grow your assets, help you make the right decisions, and make sure that your family's protected, all in one process.
Now, I like that. I think you mentioned a few things that people may not think about. That asset protection, protecting the money you have. So it's not just making sure you're allocating it correctly. Maybe you have a money market. I don't know. Maybe you're investing. The various areas that your money should be in, but also protecting the dollars. That's really important. So, so explain then that we kind of have a background of why it's important to have a financial planner, etc. Explain, what a CFP is, and what you do.
Sure. So, I've been working in this field for 16 years, and I don't know, I've run into a million financial advisors, right? Everyone has gone into the field and everyone's a financial advisor. So, one of the things I want to do today is kind of educate everyone on who is really a financial advisor, right? So anyone can make, say they're a financial advisor, but there are certain licenses that you have to acquire in order to be a financial advisor. You need your Series 7 first and foremost, or Series 6. You need to have an additional designation, like either the 65 or the 66. The 66 allows you to provide financial advice, a written financial plan to an individual. So an individual without a 65 or 63 or 66 may not write you a written financial plan because they are not, sanctioned to do so. And if you want to make sure someone is a financial advisor, you can go to BrokerCheck, look up their name, and they should come up. Their information should come up as a financial advisor. Other things, the people on YouTube, and no knock to them, and they call themselves financial advisors, but they're not regulated. I'm regulated by FINRA. I'm regulated by the SEC. And now as a certified financial planner, I'm regulated by the CFP board. And being a CFP, it's a fiduciary responsibility. I have to show due care to my clients and the best interest above my own. All right. I have to make a sworn statement that, I'm acting as a fiduciary. And, to be a CFP, it's not an easy task, right? It's a very, very difficult task. I think it's one of the most difficult challenges that I had to do in the financial services industry. Just to name a few, there's 6 modules, and that takes about a year and a half of your time to complete. And after you complete those 6 modules in the 6 key areas, you have another additional 250 hours of studying just to get to the exam. And then once you get to the exam, it's a 6-hour long exam. And the pass rate, I don't know, it's about 30% pass rate for individuals. So it's a really tedious exam that we have to go through. You need at least 3 years of experience and about 5,000 hours of financial planning face-to-face in order to be a certified financial planner. And then you have to go through an ethics background check, and you have to go by their fiduciary standards. So I'm governed by 3 different bodies. So there's not much oversight. There's a lot of oversight, no oversight at this point. So.
Wow, I like that. Kind of describing the difference, because you're right. I mean, in an attempt for people to kind of, have some income or find a industry that they kind of want to be in, you do find everybody's a real estate agent, everybody is a financial planner. So it's important to understand what that CFP designation means. if you can, give us, a couple of examples where you've been able to kind of steer people in the right direction, when they came to you, and maybe, maybe they weren't that in that much of a mess, but just kind of give us a couple of examples so people understand that these are, real life solutions that you really walk people through the process of, correcting or growing, their financial foundation.
Sure. So, I get a lot of referrals from my client base, and I received a referral, I would say about 5 years ago, and the individual, modest comes from modest means, and they were getting ready to retire. And I looked at their retirement accounts and looked at what they were spending, and it didn't add up. They would have to continue working, if we didn't do something in the planning process. So, in looking at all of her financial details, I was able to help her reduce her debt. I was able to I was able to make her refinance her home to a much lower interest rate, and she had a ton of dollars freed up. So, with her retirement and Social Security, and with the freed up cash flow she received from reducing her debt, she could at least have a decent retirement where she could pay all her bills and take a few vacations. So that was, one win. And another one is, a doctor in uh, West Palm Beach. They were working with a financial advisor, and they were paying a ton of money for everything. And they were, spending about $20,000 a month. And by the time I was done with their financial picture, I was able to help them reduce their savings, right? So they had free cash flow, and I reduced their protection planning. So they had just the same amount of protection, but they were paying a third less. I was able to help them save one of their properties because it was underwater. So just by the planning process, and they tell me every day, had I known you 15 years before, I probably would have been a gazillionaire, right? I get that all the time. So, just for me, it's getting underneath the hood, looking at what you have, and then coming up with some strategies and opportunities, through the planning process that can really change someone's life.
And I like that. You kind of gave some really, down to earth, average, kind of everyday examples so people understand. Although you said it earlier that you don't have to be this gazillionaire, to have a financial planner. You're helping people make better decisions with some everyday issues that may come up. Um, so you kind of talked about your services. I want to go into that a little bit more in depth. So besides helping people, maybe invest, etc., talk about the different things that you do, maybe the different products you work with. Do you, talk to your clients about life insurance? Do you, partner them up with, a CPA to make sure they're tax planning properly, or do you do that? Kind of walk us through that.
Great. So being the financial advisor on the team means that I'm absolutely the quarterback. I'm Lamar Jackson of this, right? So I'm kind of delegating the CPA. I'm delegating the asset protection attorney, the estate planning attorney. I'm kind of delegating all of that because I'm the first one to know their total financial plan. I know everything going on with them financially. I know where the gaps may lie in their financial plan and what they may need. So, when I sit down with the client and I see some tax opportunities, I come up with the tax planning strategies. As a certified financial planner, I can't do CPA work, even though I know a lot about taxes, enough to be dangerous. I can't give tax advice. So I have to partner up with the CPA, tell them about the strategy, how it's going to work with the client. And the CPA has to sign off on it and say it's a viable strategy and it's going to help the client. And that's how we work in tandem with one another. CPAs, CFPs, the much needed center of influence at that point. So we really work well together. Uh, and as far as if there's an estate planning gap, I put the estate planning gap together through their finances. I make recommendations based on the financial planning, what I feel will be beneficial, and they bring that to their estate planning attorney. And we have conversations about why, the rhyme and the reason why I feel they need a trust or not a trust, or things of that nature. So it's just me being a quarterback. I'm the one throwing the darts, making sure that the team is put together and helping the individual reach their financial goals.
No, I like that. I like that you acknowledge you really do need a team. It's kind of the financial planner, CPA, and then that estate planning piece. Um, how does all this kind of change, or can you give us a couple other considerations for individuals who have children? When we talk about ensuring that we're passing on that generational wealth, um, what are a couple extra considerations that people should be making once they have kids?
Right. So, as an individual, we really look at how much you are going to save in the cash reserves section. So, individual making one income should have 3 months of cash reserves, which means of their monthly expenses, right? So if your monthly expenses are 10,000, you should have $30,000 in the bank, right, for opportunities and emergencies. That changes when you have children or in a two-family household, right? So you want to have a little bit more cash reserves there for opportunities and emergencies. Obviously, for those reasons, you want to look into protection planning. Obviously, in the beginning stages of the marriage or having children, you want to look into term more than whole life, simply because it's a cost, the cost of it at that particular time. And then you want to start your, college planning a little bit earlier, because the time value of money would definitely help you if you start earlier. And a little strategy that I use with some of my clients is starting a life insurance policy for the children and building up the cash value as they get older for a lifetime. So, there's different opportunities that you look at for a couple than you would for an individual, because obviously there's more risk involved with a couple and children. And with the individual, you just have to make sure that they're saving and, following the rules.
Yeah, no, I get that. Um, and speaking of, using that life insurance policy in a different way, I like that. Um, and there's also other, vehicles that individual may use, like a 529 plans, or even the college prepaid plans. So you talk to families about those options too. What do you think about those options?
Yeah, so I would give them three opportunities or three different directions to go. Obviously, the one that I want to steer them towards that way. It all depends. Everyone has different financial needs, and their financial structures are different. So I may recommend a UTMA for a client, which is Unified Trusted Minors account, and I may do a 529 for another individual, or I may recommend a Roth IRA, because they all work in different
Mhm.
ways for different individuals, and the amount of income that someone makes determines which vehicle is going to probably work best. Or I use all of them, in unison, right? Use all of them in unison, and we have a dynamic plan. But it's all based on individuals and their personal situation.
Okay. Well, the chamber, we have a lot of small business owners. Um, I call them even some of the micro businesses, because it's a company of really one. And then we have small businesses that may have um, 2 to 10 employees. And so obviously they have to plan, and they may be different considerations for them, because they're not necessarily working and just bringing income, but they are in fact, you know, earning income, but then at the same time they have to plan, and they have to put their own SEPs and all these different, retirement plans and everything together for their company. Uh, I want you to answer this question for me, because some business owners are like, they'll hire their children and pay a salary, and that's kind of a way of allowing their kids to earn money earlier. What do you think about that as well? Because some people haven't heard of that. I just want to kind of put that out there.
Well, again, so I can't really give advice. So I'm not giving advice here, right? This is all educational for everyone. If there's an opportunity for you to hire your children, it's going to help you tax wise, right? On the tax deduction It's going to help you out tremendously, right? So, without giving advice, yes,
Right.
we would say that's a great opportunity, and we'd look into the whole picture in total and make the recommendation. But when we talk about small businesses in general, this is where I really like to put my arms around the individual because there's so many different moving parts that they're not aware of. I run into so many individuals that have an LLC, right? And they're receiving income. And I asked them, "Did you fill out your 2553 form?" And they said, "What is that? I never heard about it. No one know what it is." I said, "Well, you are S Corp or C Corp or Incorporated." And what it winds up is they're sole proprietor, LLC, sole proprietor, single member. And because of that, guess what? You guys are paying the most taxes more than any one individual. So, when I'm able to get underneath the hood and kind of advise them and educate them, kind of switch that around and help them reduce their taxes. And now you have a profitable business instead of someone that's breaking even and paying the IRS more than your fair share. So, when I get around small business owners, we look at, which business entity is the best for you based on the risk that the business is taking, right? So we look at the risk and decide which business entity is the best for them. Second step is tax planning, right? Have you created a basis for your business? Are you running the right expenses for your business? And then from that, we want to say, can you do a retirement plan? And how much taxes do you really owe? So if it's something that we could just put a 401k or profit sharing or SEP, as you mentioned earlier, we'd apply that and help them save on taxes. And it's twofold because it's also helping them prepare for retirement, right? But then again, there may be some unique needs for the small business owner. We might say we'll do an individual 401k because now you can loan up to 50% of some of the value, right? And now your business is your own bank. We might look at that, right? So, and then for some small businesses, C Corps mainly, we look at defined benefit plans where you can put a lot of money away, right? And you can save a ton on taxes instead of paying Uncle Sam. You can pay yourself and you can expedite your retirement. And you can almost create a pension for yourself in a 10 to 12-year period. So there's many different ways you could look at it as a small business owner, but that is a space that I really love because if it's two partners, we look at succession planning, we look at buy-sell agreements, we look at key person, key man insurance policies, we look at putting all those things together for one individual and helping them with the 6 key areas of financial planning as well on their personal side. So I really, really enjoy the small business owner at that. That's it's probably the most fun I have is working with a small business owner.
Very nice. So Stan, you just, I'm sure, blowing everybody away. You got your designations, you're talking about the 6 key areas, and I'm sure people are going, oh my God, I can't afford to have I can't afford a financial planner.
Right.
Look at all that he does. So tell us a little bit about that part, that piece, the compensation. Um, and then if you can, because I've even heard in the past, the different compensation models that, can run people into a little bit of a conflict of interest. So just talk about, I guess, first about how you're compensated and then how you avoid those conflict of interest type models.
Sure. So first, I'll just get rid of the conflict of interest, right? The way that we get rid of a conflict of interest is by disclosing, right? We talk to the client and say, look, this opportunity may be a conflict of interest. I may be receiving a revenue stream based on a referral or relationship that I have, and I may be getting compensated if I make a referral out to you and you use their services. So the thing is open disclosure, having the conversation, and being upfront with the client at that particular time to, if there is a conflict of interest, they're aware of it and they have to sign off on it at that point. The other ways that I get paid, I'm not a fee only, I'm fee based. So me personally, Stan LeConte CFP is fee based. So I get paid on the fee side, which means that if I manage millions of dollars, I get a percentage of those millions of dollars paid to me on an annual basis. And it's usually on a percentage, 1-2%. And then as a fee-based advisor, I get paid by doing commission products like selling life insurance or selling annuities or selling stocks on the exchange or bonds, right? So I get paid in those ways as well. And there's a standard fee for all of those. And then the third way that I get paid is, and this is probably the best way that I like to get paid is by referral. I like to receive referrals from other clients that I do a wonderful job and they send me their person that they love and care about. So those are, the main ways that I get paid. Pretty simple. For financial planning, I have to put this out there as well, right? So financial planning, when they say you can't afford me, or you can afford me, right? I mean, I charge a financial plan. It's probably less than your cable bill, less than your cable bill. So if you can pay your cable bill, you can pay me.
I like that analogy. It brings it home. It makes it real. Because a lot of people are paying a lot of money for entertainment, but they understand and can compare that. But obviously, the value that they get with having a financial planner far outweighs anything they get from that cable bill.
Absolutely.
I want to move into the qualities of a good client, because that is present in a lot of different professions. If you're not coachable, you can't have a business coach. So, what makes a good client for you?
All right. Well, that is a very, very good question, Cesar. And I love that you asked me that question because a good client for me, and I have this rule, it's called the 90-10 rule, right? The 90-10 rule is I'm going to do 90% of the work. You're just required to do 10%. I'm going to do all the heavy lifting in the beginning, and I just need your 10%, which is your cooperation. Your cooperation means that you'll answer my phone call. You will return emails on a timely basis, and you'll provide me the information that I need in order to do my job. One of the things that will constitute a bad client is not providing me all of the information, right? So if you don't provide me all of the information, I cannot give you a sound financial plan because that information that you are hiding from me is probably very viable. And, I won't be able to save you a ton of money on taxes, or I won't be able to put everything together the way that it needs to be put together because I don't know about that piece. So don't hide information. Disclose all your financial assets. And, at that particular time, I'll be able to give you a financial plan that's 99%, regulated to help you reach your financial goals and objectives. So that's a good client to me.
Oh, nice. So talk about a little bit about the actual planning process. What does that look like? What does that entail?
Right. So when we start the engagement, the first day is a consultation. Consultation will simply be a fact finding, a meeting where we'll talk about you, your personal life, your family. What are your goals? What is the intent, and why are you sitting in front of me? Why did you take this meeting today? And at that particular time, from a summation, I can tell them what I could do as a financial advisor and give you the value of a financial advisor. And that would be the first meeting, kind of getting to know each other, kind of getting the fact finding. And once they decide to move forward with the financial planning process, we go into the next steps, which is the data gathering. And they're given some homework to do. This is the 10% I was talking about, where they would have to do some homework. They'd have to look underneath the hood and provide me all the information that I need. And once we get to that point, then I could do an analysis of that information. And once I do an analysis, I know which direction to go with a financial plan. And, I start working. I start dissecting all of their financial compartments. And then I come up with a plan. And then we sit down and we talk about it and we do the implementation phase. And from that point on, I hold them accountable on a quarterly, semi-annual, or yearly basis to make sure they're reaching their goals based on what their plan states.
So as you work through this plan, how often are adjustments made or reviews made to that plan?
So adjustments are made all the time. So uh, in finance, legislation changes all the time, right? So currently at this particular time, the estate planning uh, aspect of it is we're looking at it very closely because the exemption is 12 million 60 at this current time, right, for one individual in the estate planning realm, and they're looking to reduce that to either 5 million or $1 million. So everyone that has done an estate plan in the past 4 or 5 years would have to relook at everything else and look at the strategies that we put in place to make sure that it fits for what the new legislation has put together. And then economic changes all the time, right? So when we have 8% inflation, 5% inflation, and before we were running out plans at 2.5, 3% inflation rate. Now that's gone, so we have to readjust that, right? Because inflation, uh, you know, takes away the power of the dollar. It takes the power of compounding. It takes the power of a lot of different things. So with that, we have to readjust everything. People get married, kids are born, right? People die, so so unfortunately with that, uh, adjustments have to be made on a regular basis because the financial plan is a living, breathing document. It's not stagnant. It doesn't stay the same. It has to be adjusted, and that's on a year-to-year process that we go through that.
Okay. Nice. I think it's important for people to realize that it's not a one and done situation. Like it's going to be, ongoing for all of the reasons that you just stated. Now, earlier you mentioned um, the six key areas of financial planning. Now, how do you bring all that together? How do you assess all of that when creating that particular financial strategy and plan for the individual sitting in front of you?
Well, a lot of it is based on their goals, right? So, we look at how much money you need to retire, for an example, right? So we have a 30-year-old, 40-year-old, 50-year-old coming into the office, and we have to figure out how much they need to retire. Well, some of those numbers are going to be realistic or unrealistic, right? So we have to look into what is more realistic into those areas. So to put it bluntly, it changes with every client. Everything is always different. So how much cash to put in the cash reserve is different, for everyone. It's never the same. It's based on how much an individual spends or is saving or not spending or saving. So everything changes at that point. So each individual is uh, accounted for differently.
No, and that's important. I like the fact that obviously they have to be individual plans, but then you mentioned something that was really important, the making sure they have goals. So the plan will vary based on their goals. So before we kind of sum it up and summarize our discussion, how do you help people get there? Because sometimes people have very clear goals. They know exactly what they want to do. They know when they want to retire. They know what their retirement will look like. I want to live, part-time in Jamaica and, part-time in the United States. And they have very clear goals. Some people, I want to kind of work part-time, but, still have XYZ amount of, still will need a certain amount of income coming in. So they come to you with very clear understanding, a clear vision for what they want to do. And obviously you're going to get people who don't. So if you can just give a few tips or that you give those clients that are coming in with not a very clear vision or not a really clear view of their their goals in retirement.
Sure. So this is where the open probing questions come in, right? So asking a lot of questions, open-ended questions, and having that conversation. And once you get someone talking, you kind of get a gauge of who they are, what they're trying to accomplish, and what their driving force is, right? So once I find out what their driving force is, whether it's their children, whether it's leaving a legacy, whether it's, going to Jamaica or moving to Costa Rica, I could kind of pick that out in a conversation and just having, this open dialogue with them, right? So there's a lot of behavior finance that goes on in a lot of the meetings, right? A lot of psychology. I have to read people's languages and body languages and everything. So it's a it's a task where, I perfected it in 16 years, so someone can come in there and say I don't know in the beginning and come out with some clear cut objectives at the end of the meeting and thank me because they didn't know which direction they were going to go.
I like that, and that is important. And it's true. Just you get a lot from having those exploratory conversations, which become key, so that you are able to do your job, right?
Right.
Um, so as we kind of wrap up during this, financial literacy month, um, if we kind of just summarize what you do as a financial planner, the importance of having one, and really the importance of having an engaging client, because at the end of the day, you're helping that individual really live their best life, right? Live the best life they can with the resources that they have to help them grow it, whether it's for themselves individually or for their spouse and their family for generations to come. So if you can just kind of wrap up with that, because in the end, um, we're talking about having a financial planner and having a CFP help you through the process, but it really is for you, for your benefit, so that you kind of prevent the cycle that we see too many times, oftentimes where people are on social media asking for dollars for GoFundMe for all kinds of things, funeral expenses, something that's come up that was unexpected, and obviously it's because you were caught financially unawares. You weren't prepared. So ultimately all of this is for you. So just leave us with a few, closing words, to get people to understand, what is it you do, why it's important for them to be engaged, and why it's important that we're having this conversation today.
Well, it is a very important conversation simply because, one of the things that I really love, I'm a proponent of, is financial literacy. Financial literacy is very important, and this is Financial Literacy Month, as you alluded to earlier. But in our families and in our communities, you know, that conversation is not happening as much as it should be happening. And it's no it's we can't put the blame, but now we can find some solutions, or we can help those bottlenecks get covered a little bit more, because financial literacy will actually help each individual reach their financial goals. And what I do and what I found is, when a client comes to me wanting to get the help and they don't know where to get the information, I start teaching them. I have a whiteboard. I get on the board and I start teaching them, the concepts that they need to know to move forward. And this was going to be ingrained into them on a day-to-day basis, so that they know the strategies that they put together, they could actually talk to their peers and say, this is what I'm doing with my financial advisor and why, right? This is the tax strategy he put together for me and why. So the education process is vital and key. As far as having an engaging client, those are the best experiences, to be honest. An engaging client is someone that, once the momentum starts in this financial planning process, it's like a sport. You want to win, you make it competitive, you want more money in your account, you want to take on more risk, you want to, instead of buying X, you want to buy Google, you want to do more things, because it is addictive. It's like a sport. To me, that's my analogy. I played sports, so it is something that people really get engaged once they are engaged in the process. And a client that's not engaged, you'll find most of the time that, they'll keep coming back and leaving, keep coming back and leaving, and finally they'll get engaged. But a few years have gone by and they can't get to the same goals that we had put forth in front of them 4 or 5 years ago. So it's important to start early, right? At least getting the education in financial literacy. It's important to save. It's important to seek advice, right? It's important to ask questions. And I'm a resource in the community. I'm available. You can always reach out to me. I think I'm approachable, so you could always ask me a question.
Yes, everybody. I will attest to that. Stan is approachable. He's a very nice guy. No, don't be intimidated. This once again is a topic that we should be discussing around, once again, like I said in the beginning, around the dinner table, not only with your spouse, but with your children. educating them early about, saving and budgeting and investing, and so it's kind of ingrained in them. If you want to break that kind of generational lack of knowledge about finances and being financially stable, and going beyond just being financially stable, but creating that next level generational wealth. So I thank you. It's something that we should be talking about at family reunions, etc. I mean, there's a lot that we could be doing to further this. People come into town and plan family reunions. They plan the dance or the party. They plan the church service. They plan all these different things. Invite a financial planner.
Right. Let's talk about
Invite a
generational.
financial.
Yeah, let's talk about
Yes.
generational wealth and how we can help that family create that.
Exactly, exactly. So this has been great, Sam. I thank you for being here to share your knowledge, and just taking your time to just share what a CFP is, what the financial planning process entails, and really how easy it is to ensure that you're dealing with someone who's reputable and capable. I think that was critical for you to describe what a CFP is and how really you're set apart from the rest. So thank you once again for joining us
Thank
this
you, Shay.
evening.
Me, you are great, and happy to be part of the Broward County Black Chamber of Commerce. And this was a pleasure to do, and hopefully some people got some good tidbits out of this today. I thoroughly enjoyed it. Thank you.
No, no, you're welcome. I do want you to give a plug and just kind of mention your company and how people can get in touch with you.
Sure. So my company is located in Fort Lauderdale. It is called IAA Private Wealth Advisors. The website is apw-advisors.com. My email address is sleconte or sleconte at iaac.com. I have to say it the right way for my Haitian constituents. And then, and then, you can reach me on Facebook and LinkedIn through my name, Stanley LeConte. You can always reach me on LinkedIn. And those are the ways you can contact me.
Perfect. And you all should reach out to Stan. I think that, he's really laid out and made the case as to why you should have a financial planner and really why and how it can benefit you. So thank you once again, Stan, for being here with us.
Appreciate it. Thank you so much.
Well, I hope that you have gained a lot of knowledge from our program tonight. We will be doing more of this because this is something that is critical in our community where our wealth is 10 times less than the average white family. And we have to have programming, push education around financial literacy so that we're not making basic mistakes, but we're also learning about some of the more sophisticated moves, sophisticated products that we can use to further the wealth in our family. At the end of the day, we want our children and the ones that come after us to be better off than we were. And so it's incumbent upon us to make sure that we're planning and doing all we can to set them up, not for failure, but to set them up for success. So I thank you for joining us this evening. Make sure you're checking out Broward County Black Chamber. We're everywhere. We're on Facebook, IG, Twitter, LinkedIn. So make sure that you're connecting with us. And if you're not a member, become a member. Next week is National Small Business Week. So we will be celebrating by not only showcasing our small businesses, but we'll be kicking off the month by bringing you workforce solutions for small businesses, and then ending the week with a National Small Business Week reception where we will feature a serial entrepreneur, and we will have a tequila tasting of his brand of tequila, and end it with a night cruise, just kind of focused on getting in the tourism industry here in South Florida. So please join us. Thank you again, and we'll see you next time.